Hello, good morning, ladies and gentlemen. How are you doing today? I hope you're having a wonderful day so far. So let's get to this. If you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get this started. I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section so we can get this started. All right, so what do we have in the comment section? All right, hit 818. Thank you. Good morning. Um, good morning 978. Good morning 869. Thank you very much. Raven Crow, good morning. How are you doing today? Hey Carrie, I miss you. Good morning. Glad to have you around. Trust you're having a wonderful day out there. All right, so I would like to take this as a confirmation that we are good to go this morning. And on this note, I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we take a technical dissection of the current market structure in anticipation of the New York session today. And for those who are joining us for the first time, you are highly welcome on board, and I'm very much glad to have you guys around. And what we simply do here on a daily basis is to review and monitor all the financial instruments that we have chosen for the week, which is on our watch list. We monitor them, we look out for trading opportunities, and how we intend to take a position ahead of the New York session today. At first, it might look a little bit overwhelming since this is your first time you're getting exposed to this kind of analysis, but I assure you, with time, you get to understand how this works, and you will be able to use the information you have gathered here to make your own personal and individual decision when you're about to take your trade. So you're welcome on board once again. And with that being said, let's dive into the business for the day. And as usual, you all know what we look out for whenever we want to start a new day like this. We need to take tabs on the fundamental perspective in the market, and looking at our economic calendar and considering the instruments that we have been monitoring since the beginning of the week, we do not have any macroeconomic event to look forward to. And remember, yesterday we were expecting a couple of macroeconomic events that will be affecting the US dollar, and that was the ADP employment change and the ISM services PMI, which actually came below expectation as we saw a negative variance of 0.84 and 0.92 respectively on this event. So it's not a good thing, good outcome for a good signal for the US dollar actually, and we're beginning to see um, the reflection on the chart as the dollar has continued to struggle amongst its peers in the market. And especially after a below expectation reading from the ADP and the ISM services PMI. So now all attention turns to the non-farm payroll, which is coming up tomorrow, Friday, and obviously we shall be seeing the reflection of the anticipation of the non-farm payroll on the chart today. So we are going to be taking all this into consideration while we make a decision ahead of the New York session. So I advise you to stay tuned in so that you can understand, be attentive so that you can be part of us. And if you do have any question at any point in time, feel free to let me know in the comment section. So with that being said, here let's dive into the market. And as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil chart here, the 1 hour time frame, obviously, you will see how price action has been a little bit choppy since the beginning of the week, as we continue to see a consolidation phase between the $81.50 level and the $79 area since the beginning of this week, to further emphasize the indecision in this market. And this is as a sign that participants are still very indecisive right now, as we are not sure if price will continue to the upside, or we might likely be seeing the beginning of a retracement phase in this market. And if you remember, at the beginning of the week, we observed that we had a huge bullish gap here, which dovetailed to approximately 48 pips here at the beginning of the week. As you can see, we had a strong bullish gap, and this is well connected to the decision from the OPEC Plus during the course of the weekend, where the pledge to cut oil production with the hopes of stabilizing oil and the oil prices across the globe. But what we have seen so far here in the last couple of days now, we were expecting that we might be seeing a significant move to the upside, but what we have been seeing so far here seems we are really not seeing that traction actually. And this could be as a result of the US. The US has been trying to ensure that the oil prices does not skyrocket, so they've been pumping in oil into the supply market to ensure that this price is well controlled. And we have been seeing that effect so far, and that has resulted in this kind of situation that we have here. So now, with this information we have from the fundamental perspective, let's look at the technical side of the chart to see how we could actually take advantage of any trading opportunity. Well, during the live session yesterday, we were looking out for selling opportunities actually, and we said if price action breaks down the bullish trend line, which has been supporting this momentum since the beginning of the week, then definitely we shall be looking out for selling opportunity. And we saw that breakdown happen actually during the live session yesterday, and since then price action has been trading below the $80.50 level, and we saw price action move about how many pips, about 80 pips thereabouts in our direction, before we saw this bullish momentum begin again. At this point in time, I hoped you moved your stop loss accordingly to secure the sell position, and if you had done that, you would have been taken out of that position at worst case scenario break even. So right now, going into the New York session today and considering the current market structure, how do we intend to take advantage of a trading opportunity here? Well, the first thing that I think is looking more likely here is the potential of a retracement phase in this market. So we are going to be taking a look at that one first of all. And if we zoom out a little bit to see what has been happening since last week, considering the impulsive move that brought price into the zone between the $81 area and the $80 level, you will notice that a retracement phase seems long overdue in this market, as those who took advantage of the buy position somewhere right below the $75 level will at one point in time want to be doing some profit taking activity, which definitely will reflect on the chart in the form of a retracement into structure in anticipation of that second wave of bullish momentum. And if we look at the current structure and look at what has been happening here in the last 72 hours, you would notice that price action appear to be transitioning into something that looks more like a reversal pattern, where the neckline of that reversal pattern falls around the $79.80 level. So if I give you a visual representation of this, you will see it becomes a little bit clearer. So we have something like this, where you can see since Monday morning we have been seeing buy pressure resume around this area. So every attempt by the sellers to break down the structure has been met with strong resistance from the buyers at any point in time. So for this potential reversal pattern identified here could turn out to be a valid and tradable one we need price action to break down the $79.80 level, breaking down that neckline to give us that confidence that we might be in for a retracement phase to the downside. So that is the only way we are going to be looking out for selling opportunities in this market. So we are waiting for price action to break down the $79.80 level for us to join a bearish move to the downside. And in as much as we expect that potential to happen in this market, we also want to take into consideration the activities of the buyers in this market. And if we look at what has been happening here in the last couple of weeks, you will see that price action has been very, very bullish. So we cannot ignore the potential of the buyers at this particular point in time. Okay, hold on a second, please. I'm sorry for the breaking transmission. I had to sort out some power outage issues here, but we are good to go now. So, like I was saying here, we also want to take into consideration the potentials of the buyers in this particular market. And if we consider the long-term bullish momentum here, there is a high chance that buyers could actually come in. And if they actually come in, how do we intend to join, or what do we want to be seeing on this chart that will give us that confidence to feel comfortable in the buy position? So now, if you look at what has been happening in the market here since Tuesday's trading session, within this all choppy scenario we have been witnessing here, you would have noticed that price action has been finding lower highs. Though we couldn't find lower lows here, but it is quite evident that we have been seeing lower highs in this market. And to further emphasize this, when I connected a series of lower highs here, you would have noticed the bearish trend line that you can see on your screen right now. So I think I would like to do some readjustment to this trend line a little bit. So if I bring out my line chart and then we connect the series of lower highs here, I want to do some readjustment, please. Okay, so we are going to make some amendments when we bring out our candle chart. Okay, here we go. So we have a trend line already figured out here after connecting the series of lower highs. So this trend line definitely is going to be our yardstick for trading activities, as we want to see price action continue below this trend line for us to be comfortable in our sell position. But if at any point in time price action breaks out of that trend line, then at this point we want to be seeing this as a strong signal that buyers are gradually coming in this market. And if this is the case here, what we are going to be doing, remember, we are not getting too excited at this point, as we need some further confirmation to give us that leverage and confidence to actually buy the USOil. So what we are going to be looking out for is price action doing a retest of structure. So as soon as price breaks out of the trend line, we want to scale down to our lower time frame to look out for a retest of structure, where buying pressure is identified right around the $80.50 level, so that we can be part of that trend continuation to the upside. Then a further breakout of the $81.25 level will welcome additional position to this trade. So this is the only way we can be looking out for trading opportunity in this market. So we're looking out for buying opportunity if a breakout of the $80.50 level happens, which also shares a confluence with that bearish trend line. So what this simply means is that if price action breaks out of the $80.50 level, simultaneously the bearish trend line here would also have been broken, hereby giving us a sign that the trend line may no longer have the capacity to continue to hold that bearish momentum here. So that is how we are going to be trading the US oil for today. And if you have any questions, let me know right in the comment section below. So in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving on to the next option, which is the US tech. Now on the US tech, so far this week, we have been quite profitable anyways on the US tech so far this week. And look at how it all started for us this week, as we saw how price action first of all was trading within a range here between the 13,150, which happened to be the resistant line at the beginning of the week, and then we had a support line somewhere just around the $13,070 level. And you all know what we look out for whenever we have this kind of simple setup. All we need to look out for here is either a breakout of the resistant line for buying opportunity, or a breakdown of the support line for selling opportunity. And during the later parts of the New York session on Monday, we saw the breakout of the resistant line with that engulfing bullish candle, which triggered our buy position, and in fact price action moved over 80 pips in our favor before this bearish momentum happened. And right there on our Tuesday morning live session, I told us all that we might be in for another wave of bullish momentum if we start seeing price action drops further into the structure, and we start seeing buy pressure above this level to the upside. But that did not happen, as we saw price action continue to drop to the downside, testing the support line a couple of times. And with the understanding that a breakdown of the support line of that channel will obviously be welcoming sell position, a sell stop order below the structure on Wednesday yesterday was that beautiful opportunity we have been waiting for to push price to the downside. And as you can see here, price action had continued to respect the trend line we said we are going to be using as a yardstick for trading activity yesterday. So price action broke down to 13,070, and we were able to see price move about 170 pips in our favor at this point. So for those who are taking advantage of this opportunity right here, well done to you for being on standby to have caught this move. So right now, what you are going to be doing right now, if you are still have your position running, that is, if you are not yet taking your profit here and you still have your position running right now, it is very important that we move our stop loss to secure this current position. And the most appropriate area to secure this position should be anywhere right above the 12,950 area, as we have a structure around here, and we actually need to give room for price action to breathe in that regard. And while we wait to see how price action will be reacting to the 12,900 level here, I think we talked about this yesterday about the structure, as we said we need some breakdown retest of the structure to welcome more trading opportunity. So for those who had missed out on this opportunity at the breakdown of the $13,070 level yesterday, well, I still think that the market will be giving us more opportunities to join if price action breaks down to 12,900. But before we go into the details on what to look out for today, let's run through the higher time frame so that we can have an holistic view of what is really happening in this market, to confirm that will the 12,900 become a new demand zone for this week, or we could still see price action break down that structure. So in that regard, now we want to be scaling up into the daily time frame. Now on the daily time frame, we are going to be seeing what has been going on for quite a while now in this market. So now look at the structure here, but one thing I'll be doing here is to zoom into what started this year. So since the beginning of this year, we have noticed our price action has consistently been bullish, and to further emphasize the strength of the buyers in this particular market, we have a new structure here where price action has found higher highs and higher lows to transition into a an ascending channel that you can see on your screen right now. And following the breakout of the 12,800 area, which happens to be a strong selling niche for 5 to 6 months in this market, we saw the breakout happen here last week's trading session, and I told us all during the early hours of the week that there are two possible scenarios that could happen from this current structure after the breakout of that 12,800 happens. And from a technical standpoint, from the theoretical perspective here, following a breakout of a structure like this, we expect that one point in time price action may likely come back to retest the structure that was broken in anticipation of a trend continuation to the upside, which is something we are already seeing at this particular point in time. As you can see how price action rejected the 13,250 level since the beginning of the week, and since then price action has been finding lower lows and lower highs in this market. Now the question is, how far will this bearish momentum go? Will it go to as far as the 12,800, where we're expecting a retest of structure that will be inciting a trend continuation to the upside, or will it break down the 12,800 level to incite another opportunity to add more sell position into the existing trade, probably back into the support line of the ascending channel or into that very important key structure had the $12,000 mark? So these are things we are going to be looking at on the lower time frame, as currently price action appears to be rejecting the 12,900 level, just right above the 12,800. So if we sight a reversal pattern around this area, we would have no choice than to look out for buying opportunity that will incite the second leg of that bullish momentum that started a couple of weeks ago on this chart. But if the structure here that we identify on the lower time frame looks like a reverse, a trend continuation pattern, probably like a bearish rectangle, then we might be looking forward to the breakdown of that structure for a bearish move that might likely lead into the 12,800 or a breakthrough the 12,800. So these are things that we are going to be looking at. So with the information we have gathered here on the daily time frame, let's scale back down into the 1 hour time frame to make a decision for today. So now going back into the 1 hour time frame, we are going to be focusing on that area around the 12,900 level, where we shall be looking out for whatever structure the market price action has transitioned into. So right now, as you can see what has been happening here since the later part of the New York session yesterday, we can see that buy pressure has been resuming from that level. And if we go into the past here, you will see how the 12,900 has been a major determinant of price action since the month of March. We can see this area was a strong selling niche initially before the breakout of the structure happened at the end of last month's trading session, and since then price action has been trading to the upside of that level. Now we have price back into that structure, and we have been seeing buy pressure around this area. So now the question is, just like we pointed out on the daily time frame, will this structure here turn out to be a reversal pattern, or is it going to turn out to be a trend continuation pattern? This is what we shall be looking at here. So when we bring out our line chart at this juncture, the first thing we're going to do, since we already have the support line figured out here, hold on a second, since we already have the support line figured here at the 12,900, I want to do some readjustment. Okay, 12,900. Then we should also identify the resistant line of this channel, which at this point in time falls around the 12,960, I guess. So we shall be labeling this for the sake of clarity. So we have the 12,960 level, as you can see here. So I place at the top right hand side of our screen so that we can see it clearly. All right, so we have the 12,960, and if we bring back our candle chart, let's see if there are some adjustments to make. Okay, it suits it already. So we have, if we consider the impulsive move that led into the structure, you will see that we are having something that looks like a bearish rectangular pattern, where the breakdown of the 12,900 level will be an opportunity to sell the US tech for today. So it's looking a little bit bearish at this particular point in time. As you can see, we have a potential bearish rectangular pattern, and we have had a little breakdown of that support line here in the last 30 minutes in this market, which is a sign that sellers have the potential of building some momentum right below the 12,900. And if we go a little bit higher into the 4 hours time frame, I want to show you something here on the 4 hours time frame. And this is the 4 hours time frame here. If you remember, at the beginning of this week, we identified this ascending channel, and look at what is happening around this area. You can see how price action is currently trading at around a beautiful confluence here, where the 12,900 area shares a confluence with the support line of that ascending channel. So at this particular point in time, we are at a very critical point in this market where anything could actually happen. A breakdown of the 12,900 will confirm the breakdown of the support line to the downside, hereby giving us an opportunity to sell the US tech to the downside. But if the buy pressure above the 12,900 happen, this might likely lead to price action respecting that support line one more time, giving us a clue that the trend line is still very strong to continue to maintain that bullish momentum to the upside. So you will see that we are at a critical point in the market right now, and so we need to be very, very careful of how we are going to be taking a position here. And scaling down to a much more lower time frame will help us to be able to make a very well-informed decision in that regard. So right now, I would like us to scale down further down into like a 15 minutes time frame to see what is really going on around that area. So right now, when we scale down into the 15 minutes time frame, hold on, I want to bring this into our purview so that we can see things more clearly here. All right, so that's the support line here at the 12,900. We have been seeing buy pressure. We have seen an attempt by sellers to break down the structure here. So at this point in time, I will be suggesting that we have a sell stop order right below the 12,900, since we have seen a sign that sellers could likely have the potential of building some momentum around that area. So having a sell stop right below the 12,900 seems more reasonable at this point, with the hopes that this structure here will turn out to be a trend continuation pattern. And remember, at the beginning of the week, we already have a TP target zone for sellers, which is sitting just between the 12,850 and the 12,650. That is a wide potential zone for our TP target for any sell momentum here. So you could place your TP target anywhere around that area. And remember, at the beginning of the week, we are looking forward to buying opportunity around this area. So when price action comes into this zone, the appearance of a reversal pattern here will be an opportunity for us to join a bullish momentum. But till when that happens, we look out for more selling opportunity as long as price remain below the 12,900 at this particular juncture in this market. So now, with the understanding we have here, looking out for selling opportunities in this market, we cannot ignore the potential of buyers as usual. And one thing about this structure here that also would want us to take into consideration the potentials of buyers in this particular market is the fact that price action is sitting on a very strong support line, which has been consistently respected for the last 4 weeks. And obviously we saw this on the 4 hours time frame. I just showed you that in a couple of minutes ago. Now, if the buy pressure around the 12,900 continues, giving us the clue that buyers are gradually getting momentum, then we want to be having the 12,960 area as a platform upon which we want to be joining a bullish momentum. And when a breakout of the 12,960 happens at this point, then we are going to be seeing this as a reversal pattern, as the structure here will have transitioned into a reversal pattern going forward. And that will be coming in like this. So following this impulsive move to the downside, we have the first touch, price second touch, then we have the third touch here, giving us a beautiful triple top, triple bottom structure, then a breakout retest of the 12,960 on our lower time frame will incite another wave of bullish momentum. And if this bullish momentum happens, there is a catch to the structure, which I would like us to also take into consideration while we enjoy that bullish momentum to the upside. And that is the structure here had a 13,070. If you look closely at that structure, you will see how it also shares a confluence with that bearish trend line, which has been supporting this bearish momentum since the beginning of the week. So as soon as the bullish momentum continues to the upside, remember, this is a counter trend opportunity. From this week's perspective, it is a counter trend opportunity. As soon as price gets into the trend line, which also shares a confluence with the 13,070, we want to be moving our stop loss accordingly, obviously. As soon as it gets into that structure also, we are going to be moving our stop loss a little bit further as we wait and see how price action will be reacting to the structure to now decide if we are going to be adding more buy position to our existing trade, or we are about to get ready to join another wave of bearish momentum to the downside. So it's a very beautiful confluence we have there. So a breakout of the structure to the upside will welcome more buying opportunity, and a multiple rejection of the 13,070 level on our lower time frame will welcome selling opportunities in this market. So let's keep this in mind while we join that counter trend opportunity if price action breaks out of the 12,960 level. So that is my view here on the US tech for today. If you have any questions, let me know in the comment section. So with that being said, here I will be moving on to the next pair, and the next pair we are going to be looking at is the XAUUSD, which is the gold metal, of course. So on the gold here, this is one of our profitable trade for this week. Remember, as we took advantage of that bullish impulsive move that started above the 1,982, that was on Tuesday's New York session, as we also added another position at the breakout of the 1,990. So let's quickly run through how the week started for us on the XAUUSD before we go into the detail for what our expectations are. So one thing about this structure is that as soon as we started the week, we saw how price action started on a bearish note in this market around the 1,971. This was where the sell pressure began in the market at the beginning of the week, and at this point we were thinking that sellers might likely be the order for the day, for this week rather, and we saw the bearish engulfing candle bringing price back into that support zone which we had between the 1,957 and the 1,950. And at this point, I told us all on Monday that we are looking out for selling opportunities. So we were actually looking for selling opportunities at this area at the 1,971, which happens to be the resistance line for this week. But what we saw here was quite interesting, as we saw price action break out of that structure all the way into the 1,990 with about 200 pips to that direction, and we actually missed this one because we were expecting a sell position in this market. So, and the reason why we were looking out for selling momentum is what I explained earlier. And in addition to that structure, if you remember what we saw on the 4 hours time frame, where we saw something that looks like a pennant structure, and let me show you that is the 4 hours time frame here. So we had a pennant structure on the 4 hours time frame, and as you can see, we saw our price action found lower highs to give us that resistant trend line. Then we also had the higher lows here, which gave us that support line that you can see on your screen. And you all know whenever we have this kind of pennant structure, it has a tendency of giving us a trend continuation pattern, and at the same time it could give us a bearish a reversal pattern too as well. So we saw the breakdown of the structure here on Monday, which was a signal for us that we might be going bearish, but it turned out to be a false breakdown as we waited and waited for a retest of structure to join that reversal move, but that did not happen at all. But what we now saw here on Tuesday was quite interesting as we saw the breakout of the resistance line, which gave us a signal that we might be in for a bullish momentum. And coupled with that signal was the structure we identified here during our Tuesday morning live session, and this was it right here. Hold on a second, I will show you that in a moment. So as soon as price this was the impulsive move we missed on Monday. But as soon as price got into the 1,990, we saw price retrace back into the 1,978. And throughout the early hours of Tuesday's trading session, we saw how price action was within a tight channel, a $4 channel between the 1,978 and the 1,982. And you all know what we look out for whenever we have this kind of simple structure. We want to either see a breakdown of the channel for selling opportunity or the breakout of the channel for buying opportunity. And with our orders placed at both ends, we saw the buy stop order triggered at the 1,982 to trigger our first buy position for the week, and we had our second buy position triggered at the breakout of the 1,990. And since then, price action moved a significant 500 pips move on both 450 pips move on both occasions, making this pair our most profitable trade for this week. Now, during the live session yesterday, this was what we identified during the live session. We saw this beautiful consolidation phase where price action was trapped within the $2,025 level, which happened to be the resistance line initially, and then we had the support line at a $2,015 level where we saw the buy pressure from that level. And in addition to that channel was this beautiful bullish trend line where I said yesterday that we shall be using this trend line as our yardstick for trading activity. And what we said here yesterday is that if price action trades above the bullish trend line, we shall feel comfortable in our buy position, and if price action breaks down the trend line, we shall be getting ready to sell. And one thing we saw here with our buy stop order above the $2,025 level, we actually saw our buy position triggered and price action moved about 75 pips in our favor before the sell momentum began. And I hope you moved your stop loss accordingly to secure your current position, as you would have been taking out at worst case scenario break even, if not small profit in that case. And we saw that the bearish momentum here led into a situation where price broke down that bullish trend line, which was supposed to be serving as our yardstick for trading activity, which welcomed the idea of a sell position in this market. And I hope you took advantage of this move, and if you really did, you would have made some profit on that one before this bullish momentum took you out, as you had about 150 moves to the downside before this bullish momentum took you out. Now, with the situation we have right now, let's see how we want to be trading this one for today. Now, we have a situation where as soon as price got into that $2,025 level, we have been witnessing a choppy situation around this area. And I think I laid much emphasis about the psychological expectation around this area, considering the fact that this is the first time price action will be getting to this point this year. And you all know that whenever we find a new high, whenever price action finds a new high, it takes quite a while for price action to get acclimatized to that structure. And most of the time, the emotions of fear is what is very dominant around this area, as majority of participants in the market don't want to stay too long in a new high, as there is a high tendency that a crash could actually happen, and they don't want to lose out on the profit they had made so far. So in this kind of scenario, you see some people closing profit little by little, take some profit off their position little by little, and this is why we normally have this kind of choppy situation around this area. So whenever we find a new high, we always see price action go through consolidation, retracement phases, choppy situation for a while to gain some momentum to finally break out of that structure. And if you have been with us in the last couple of weeks, you remember that when price action also tested the $2,000 level for the first time, we saw this kind of experience around that area before we finally saw this breakout of that structure that took us into the $2,032 level at this time. So right now that we have the structure here, and we are going into the New York session today, how do we intend to trade this? Now, the initial channel we identified earlier appeared to have been expanded. As you can see right now, this is no longer the resistance line anymore at a $2,025 level, as we now have a new high which is falling at around the 2032, and we also have a new low which is falling around between the 2010 and the $2008 level. So for today's trading session, we need to acknowledge this new consolidation phase, so we need to extend the resistance and the support line a little further to capture this new scenario that we have here. And I actually did that on a neater chart here, which you will see on your screen right now. So right now we have the situation mapped out. So we have a new resistance line which is sitting at a $2,032 level, which happens to be the highest point price action has ever been for this year. And we have a support line sitting between the $2,010 level and the $2,008 area. So at this point in time, we have a temporary demand zone. I will call it a temporary one in the meantime, as we still need a breakout of the $2,032 level to make this demand zone a valid one at this point. And if you look at what has been happening here since the early hours of today, we saw buy pressure resume around this area. So now the question is the buy pressure that coming in from this level a retracement of this impulsive move to the downside here, or is it going to be a move that will continue to the upside, or is it going to be a move that will continue the retracement, the impulsive move to the downside here? So these are things we are going to be looking at today. And in addition to the structure we identified this morning, if we go to as far back as the New York session yesterday, you will see that we saw a sharp rejection of that $2008 level as well here. So we have like 3-4 rejection of this area to give us a clue into the strength of the buyers at this particular point in time. So with this kind of scenario here, I'm of the opinion that we might be having a bullish momentum, which will finally lead to the breakout of the $2032 level today, in the anticipation of the NFP tomorrow, where probably the dollar might actually gain some momentum. So in the meantime, we shall be focusing on the structure here. Now, in addition to what I just identified here, is this bearish trend line you can see after connecting the series of lower highs. So please take this noted, as we are going to be using both this trend line and the $2021.50 level as a yardstick for our trading activity today. Look at the $2021.50 level. It has been a major determinant of price action in the past, at least since Tuesday. In the last 48 hours, it has been a major determinant. Look at it here. It was a selling niche. It broke out of the structure. It became a buying niche, which led to price action testing the 2032, and following the sell pressure here, it broke down the $2021 level one more time, where we have been seeing selling pressure below that structure. So at this point in time, we have a bearish trend line, which also shares a confluence with that $2021.50 level, where I want to see price action break out of that structure for me to buy the XAUUSD at this point. So to buy the XAUUSD, I want to see price action climb above the structure, buy pressure above this level, then we can be in for a bullish momentum, where a further breakout of the $2,032 level will welcome more position to our existing trade on this one. So this is what I want to be seeing on this chart for us to buy the XAUUSD. So the $2,021.50 level and the bearish trend line here is the yardstick we are going to be using to guide our trading activity for today. Now, the contrary of this whole scenario here is that if price action finds it difficult to break above the $2,021 level and the bearish trend line here, and instead we begin to see selling pressure right below the structure on our lower time frame, something like this, that price finds it very difficult to break above, then we might be in for a trend continuation in the direction of the prior leading price action. Remember, we have a bearish impulsive move here, and this might likely turn out to be a retracement, and the continued selling pressure below the structure here, it has a high chance of inciting a bearish move to the downside. Then a further breakdown of this demand zone for the first time in the last 2 days would welcome more opportunities to add more sell position to our existing trade on the XAUUSD. So these are what we are going to be looking out for on the XAUUSD today. It's a very simple setup we have here, and only two structures to look out for any trading opportunity, and that is the $2,021.50 level and the bearish trend line that were connected after around the series of lower highs in this market. So let's keep tabs with this area, and you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. If you have questions, feel free, let me know in the comment section. I'm always available to ensure that I make things a little bit more clearer if you find it clumsy at one particular point in time. Okay, I can see 868 is making a comment here that he doesn't know where he has found himself and he wants to understand what is done here. All right. So we are all traders. We trade the financial market. We trade the currencies, the currency pairs. We trade the options. We trade cryptocurrencies here. So what we simply do here is to analyze the market, looking out for trading opportunities on how to take advantage of a potential buy or sell position ahead of the New York session, which is starting in about an hour from now. So that is what we simply do here on a daily basis. We also have pairs that we have been monitoring since the beginning of the week. We have like 5 to 6 pairs that we are monitoring since the beginning of the week. So we come here to review how well these pairs are doing and how we want to stand by for more trading opportunities during the New York session today. So this is what we simply do here, and it happens on a daily basis, 10 a.m. UTC. So I hope I made myself clear here. 868. If you have further question, let me know right in the comment section. So that is what we simply do here, and I hope you find it very, very useful in making your own individual decision on the trades you will be taking from this platform. All right, so let me know if you have any other question, please. So in the absence of no questions regarding what I just explained so far, I will be moving on to the last pair that we are going to be treating for today, which is the GBPJPY, which was introduced to us by XAUUSD on Monday morning. And since Monday, I've not been seeing XAUUSD. XAUUSD, are you around? If you're around, please let me know that you are with us. All right, so on the GBPJPY, since the beginning of the week, we have been quite profitable on this pair actually. As we at one point in time, we took advantage of a buy position that was on Tuesday after citing the breakout of that resistant line we identified at the beginning of the week. Remember, we had this resistant line at the 165.200 level at the beginning of the week, and you all know whenever we have a breakout of a structure, we are looking out for buying opportunity, and as a result of that, we had our buy stop order above that level, and price action moved about 120 pips in our favor before this bearish move happened. And on that same Tuesday morning, we identified a simple setup between the 166.400 level and the 166.00 area, where we said a breakout or breakdown of that structure will be welcoming a sell or buy position in this market. And luckily enough for us, we saw the price break down the 166.00 level, and with our sell stop order below that level, we had our first sell position for the week triggered. And since then, you can see what happened in this market. Price action has continued to find lower lows and lower highs as price action move a whooping over 320 pips in our direction since Tuesday on this one. So we have been quite profitable on this pair, and we had an opportunity to add more positions at key breakdowns of key structure that we duly identified during the course of the week. Now that we're heading into the New York session at this point, what is going to be our plans and how do we intend to take advantage of this trading opportunity? Well, if you look at what has been happening on this chart in the last 24 hours here, you would have noticed that as soon as price got into that 162.800 level, we have been seeing buy pressure resume just right around that area, which for me at this particular point in time is a sign that we might be in for a reversal pattern that might lead into price action climbing higher highs. And now, why have I said so? Now, look at the lowest point price action has been for this week, and that is the 162.800 level, which is this area. And when price action climbed, so following this impulsive move to the downside, testing the lower lows here, the lowest point this week, we saw price climb up, and with an attempt by the sellers to continue that trend to the downside, we saw this move all the way to the downside here. Price action was unable to break down the previous low, which is a very beautiful sign that we might be in for a reversal pattern. And as you can see, if you follow this structure closely, you will see that we have a reversal pattern here in the form of a double bottom structure, which from a technical standpoint is a strong reversal pattern. And you all know what we look out for whenever we do have this kind of reversal pattern. We want to be identifying the neckline of that reversal pattern, from which we are going to be confirming if this reversal pattern is actually valid and a platform upon which we are going to be buying at that point. Then if we bring out our line chart here so that we can acknowledge the neckline of that reversal pattern, you will see that we have it somewhere right around this area. Hold on a second, let me find the resistance line here. So we have it just right around the 163.500 level, which I would like to readjust right now so that we can have a better clarity into what our expectations are for today. So we have the 163.500 level figured out, which is from a technical standpoint is a strong psychological level considering the round figure of that price. And right now we already have price action break out of the 163.500, which is the neckline. We've had a couple of retests of structure, which if you had been monitoring this, you would have had a buy position running at this point. But if you had missed out on that buy position, well, we can be looking forward to another opportunity had the breakout retest of the 164.00 level. And from this situation we have here, there is a tendency of having multiple entries on this chart. So we have structures like the 164.400 level, and we have the structure at the 165.200 level, which are areas where we can be adding more position as soon as we have a breakout retest of these structures. And now talking about the 164.00 level, I hope we still remember the importance of this 164.00 level. I think I laid much emphasis on the structure at the beginning of the week, which was our neckline of the potential reversal pattern we identified on the daily time frame. So let's go on into the daily time frame here so that we can see. Hold on a second, I would like to hold on a second, please. I would like to give me a moment, please. I want us to have a clean chart. Okay, so let's go back to the daily time frame here, and this is it right here. This is the daily time frame. And if you remember, we saw this bearish move to the downside at the beginning of the week. We saw this demand zone here, and we saw how, despite the fact that we've been witnessing lower highs, we saw that price action was unable to find lower lows. As you can see, price action was gaining momentum, gradually giving us a reversal pattern around this area. Now, with our neckline sitting at the 164.00 level, that level I showed you on the 4 hours time frame, and I told you that I wanted to show you how important that structure is on the daily time frame. So you can see the 164.00 level here. It is serving as the neckline of that reversal pattern that you can see on your screen. Now we have the breakout of the trend line. We had a breakout of the neckline of that reversal pattern, and if we have price climb above the 164.00 level, we might be in for another wave of bullish momentum here. So above the 164.00 level is a very strong area to look out for buying opportunity in this market. So that is what I wanted to show you on the daily time frame. So let's go back into the 4 hours time frame here. So this is the, okay, hold on a second, let me bring this back. Let me bring this back in. So we have 350 instead. Okay, so we have this, the neckline we identify on that reversal pattern on the higher time frame. So if you had missed out on this, then we are going to be waiting for the breakout retest of the 164.00 level to welcome more opportunities in this market. So let's be on standby to catch that move. So on this one, we are looking forward to a bullish momentum, as we have cited a reversal pattern, which from a technical standpoint is a very strong opportunity to join a move to the upside from this area. So let's keep on monitoring price action and looking out for more opportunities at the breakout of structures like the 164.00 level, 164.400, and the structures at the 165.200 level to be able to add more position to our existing trade. Now that we have looked out, we've identified potential trading opportunity for the buyers at this point. You all know what I always do. We need to always keep tabs with the opposite perspective too as well. So since we've been enjoying some selling pressure around this area since the beginning of the week, we cannot ignore the potentials of the sellers at this particular point in time, of course. So we need to also take into consideration what happens if price action continues to find lower lows. Are we going to leave that trade and lose out on that opportunity? No. We want to also take that into consideration so that we can also take advantage of that trading opportunity. And how do we do that? What do we want to be seeing here that will make us change our perspective from being bullish to bearish in this market? So the first thing I will do here is to bring out my line chart, and we have a structure already where we have higher lows in this market, which emphasize the bullish momentum. So we are going to be acknowledge that by connecting the series of higher lows here. So when we connect the series of higher lows, we have a beautiful trend line, which is going to be our yardstick for trading activity for the later part of this week. So what we want to be seeing here is price action continue to trade above this bullish trend line to make us feel comfortable in the buy position we have on this trade. But if the contrary now happens, and we now cite a situation where price drops below the 163.500 level, which also shares a beautiful confluence with that trend line that we just identified here, then we might be in for a bearish momentum. But remember, we are not going to be getting too excited at this point, as we still need some confirmation to reflect on the chart in the form of price action to give us that leverage and confidence to join that bearish move to the downside. So what we are going to be doing here is to be patient. As soon as price breaks down the bullish trend line, we want to see price action come back to retest structure. So as soon as price action break down the structure, we scale down to our lower time frame. It could be your 3 minutes, 5 minutes, your 10 minutes, even your 15 minutes time frame. Look out for retest of structure where price comes back to retest either the bullish trend line or the 163.500, after which we look out for multiple rejections, signs that buyers are finding it difficult to climb above the 163.500 level. Then we can join the bearish move to the downside. And if a further breakdown of this demand zone we identify here happens, then we have no other choice than to look out for more opportunities to add more position to our existing trade on the GBPJPY. So this is what we want to see here that will make us change our perspective from the expected reversal pattern we identified on the structure earlier. So that is that on the GBPJPY today, and on this note I want to call it a day. But before we draw the curtain, I would do a quick recap of what we talked about today, especially for those who are not part of the beginning of this live session, so that they can also have a clue into what our expectations are for today, and they can also take advantage of these opportunities. So the first commodity we looked at today is the US oil, and we were in a sell position prior to the beginning of the live session, and I told us all to move our stop loss to our entry point so that we can secure that position. And our center of focus for today lies around the $80.50 level, which is here, and the $79.80 level. Then we have a couple of structures here that will be serving as our yardstick for trading opportunity. Remember, we acknowledge this choppy situation here since the beginning of the week, which appears to be looking like a reversal pattern around this area, where the neckline of that reversal pattern is falling around the $79.80 level. And we said for us to sell the US oil today, we want to see price action break down the $79.80 level, where we have our sell stop, to join a decline to the downside, which I'd emphasize is a counter trend opportunity, as we have structures where we could have our TP target that could lead into the second wave of that bullish momentum. Then I also said here that if price action does not drop into the $79.80 level, and instead it continues to find higher highs, then we have the trend line here, which has been respected in the last 48 hours as our yardstick, coupled with the $80.50 level, where a breakout of that structure will be welcoming a buying position. But remember, I told us all that we are not going to be getting too excited here, as we need some confirmations to happen, which is likely going to be coming in the form of a retest of structure right on our lower time frame. Look out for buying pressure, then we could join that bullish momentum to the upside. Then a breakout of the $81.25 level will welcome additional position on this commodity. So that is that on the US oil for today. I wish you best of luck on that one. Then on the US tech, this is what we saw here on the US tech. I already told us all to have our sell stop order below the 12,990, with the hopes that this whole structure we have between the 12,960 and the 12,900 will turn out to be a trend continuation pattern. But if the opposite is what happens here, and price action continues to find higher highs, then a breakout retest of the 12,960 will be welcoming a buy position. Then we would have noticed this will turn out to be a reversal pattern. So let's be on standby to catch that one too as well. Then we went on to talk about, the XAUUSD. And on the XAUUSD, we have a choppy situation here. And I told us that we did some little readjustment here, as we now have a wider range, which is as a result of the psychological expectation around price action finding a new high in this market. So we already have a structure here at the $2,021.50 level here, coupled with this bearish trend line that will be serving as our yardstick for trading activity. So I said for us to buy the XAUUSD at this juncture, we want a breakout retest of structure, then we could join. Then a further breakout of the highest point at the $2,032 level will welcome additional position in this market. However, if price action finds it difficult to break above the $2,021 level, and we continue to see certain pressure right below the structure in our lower time frame, then we might be in for a sell momentum, where a further breakdown of that demand zone at the $2,008 area will be welcoming additional position to our existing trade. So screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the XAUUSD. Then we went on to close the day with the GBPJPY, which was introduced to us by AEJAWI, and we've been selling the GBPJPY in the last 48 hours, hereby making us some profit on this one. We were able to scoop over 350 pips in profit here before the reversal pattern we identified here appeared during the early hours of today. So we saw something like this. We had the breakout of the neckline already, and I made mention here that for those who had missed out on the breakout here, then we should be looking forward to the breakout of that 164.00 level to add more position or join for the first time if you had missed out on the first one. Then we also have structures like the 164.400 level, the 165.200 area, where a breakout retest of this level will be welcoming additional position to our existing trade. And to further support this bullish bias here, making us more comfortable in our position, is this bullish trend line that we identified here. So what this simply means is that if price action continues to trade above that bullish trend line, we shall feel comfortable in our buy position. However, please take note of this. As soon as price action breaks down the bullish trend line, which also shares a beautiful confluence with the 163.500 level, we are going to be getting ready for a momentum shift. And remember, we are not going to be getting too excited at this point, as we still need some confirmation to happen, which is going to be reflecting on the chart in the form of a retest of the trend line or the 163.500 level, where buyers find it difficult to climb above the structure. Then we are going to be looking out for opportunities to sell. Then a further breakdown of this demand zone at the 163.00 level will welcome additional position to our existing trade here. So that is how we are going to be looking out for selling opportunities in this market. So we have this bullish trend line here coupled with the 163.500 level, which will be serving as the yardstick for trading activity for today. And it's on this note I want to call it a day here on the Extreme Speed Live. It has been a wonderful moment with you guys, and for those who are joining us for the first time, I hope you are able to take one or two things with you, and I hope everyone is well equipped to be able to take advantage of any trading opportunity during the New York session today. So once again, I wish you best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the markets we have been monitoring since the beginning of the week, and also get ready for the almighty non-farm payroll tomorrow, which will be the last trading day of the week. Do have a wonderful evening, everyone. Bye-bye.